Hi traders, my name is Mary Redmond. I'm talking right now about the Euro US dollar pair. So I do like this personally. I took a small short myself at 144.80, and I do like this to the short side just for the next day or two for a couple of simple technical and fundamental reasons. If you look at this most recent move it made, we almost hit the 50% Fibonacci retracement level, and it wasn't able to go above and close above 145. So I think that we may be headed for a down pull there. We also made a bearish cross here on the twin RSIs, and I'm looking at a chart of the dollar index. There's actually $2 indexes now. It looks like this could be a dollar channel here, because it got a little bit out of its channel, and it looks like this is a strong support level. So I wouldn't want to see it go below this level, but as long as it maintains this trend, then we may see additional downside in the Euro US dollar. So I'm also a little bit skeptical of the stock market rally and the move towards risk appetite today. And if we look at the volatility index, we did see a spike up yesterday out of its Bollinger Bands to the 20 level. And I'm a little surprised that that helped to stimulate such a strong rally, but we did have slightly better than anticipated news out of China. China's obviously still growing at a very strong speed, despite the fact that they're increasing the raise reserve requirements. So, of course, nobody knows what's going to happen with that. I guess they'll probably continue to keep raising until inflation starts to go down. But we also had, with the stock market rally, it still looks as if it's in a intermediate term downward trend or downward channel. And usually when you see a true reversal, a day like this, which is going to be the reversal of a bearish trend, it'll open up high and then it will close towards its at or above the highs that it formed in the middle of the day. It'll close at its highs. We really didn't see that today. In fact, we saw the pull up in the Dow and the S&P. That's a big short covering, and it reached a high level here, and then it kind of pulled back a little towards the close. So that's not really a completely convincing rally in the stock market. So what we're seeing here is really a lot of indecision. I think nobody knows what to expect when the Fed stops the quantitative easing. Nobody knows what to expect with the EU problems. And of course, if you listen to the news, you read the papers about this, you're just being bombarded with news every day. I mean, there's pundits coming out all the time and saying that the Eurozone is going to break up or the EU is going to collapse, which I personally don't believe that, but they obviously have challenges, and the challenges are going to be there and continue for a while. And I think that it may cap rallies on the euro. So I also think just fundamentally that the markets were still anticipating a pretty aggressive series of rate hikes from the EU, but they may raise rates one more time in July and then, do a wait and see. From everything we're hearing, it sounds like Mr. Trichet says he wants to take a preemptive strike against inflation, and that he's given a pretty clear indication that he's going to raise rates in July. But it doesn't mean that the ECB is going to go through a series of hikes. And in the last meeting, if you listen to what he said, he did say that there was some clear concerns about global growth going forward in the second half of 2011. So, of course, there's always going to be some uncertainty. The big elephant in the room, of course, is the U.S. Fed, because it's the largest central bank. It's been very aggressively adding liquidity, and that's stimulated this run. And of course, since people don't know what's going to happen when that stops, they're being very cautious right now. So that you can look at the charts, there's a number of different ways you can see the euro. You can actually see that this could be a downward channel, in which case we could be making a more aggressive move downward. And of course, all of this depends on the news. There was more news today that there was a meeting of the EU finance ministers, which was relatively inconclusive in terms of a final deal or final arrangement. So the markets have become a little bit immune to these news resources, these news reports coming out. I mean, the credit agencies downgraded Greece again and said that any type of debt restructuring would be considered a default, and the markets kind of shrugged it off. So you have to think about what's priced in and what's not priced in. Well, what's priced in is probably that there's a second bailout for Greece. They obviously can't meet their obligations without help from the other EU countries. And what's not priced in is the level of economic growth we're going to see in the EU going forward, and how aggressive the ECB is going to be raising rates. So that's still uncertain. But for the time being, I think that this is due for a pullback, just because I'm a little skeptical of the rally in the stock market, and I think that the the more important trend channel here is this one, which would hit up against and was not able to clear the 145 level. So there's also some consumer price economic reports coming out from the U.S. tomorrow, and despite the fact that the employment is still relatively high in the U.S., Mr. Bernanke has said that if they need to take steps to combat inflation, they may have to do that before we reach the full employment level. So, of course, that would it should be somewhat bullish for the dollar if people start anticipating that the Fed's going to be raising rates at any point during 2011. So for now, I just think that was a good short today, and we'll have to see also if it makes a decisive break. It did make what looks like a little break out of this channel, and we'll have to see if there's any follow through on that tomorrow.